You are watching Market Watch, the brief overview of the key events from the world of finance. The U.S. Treasury bond market saw a sharp decline reminiscent of the early COVID-19 pandemic turmoil. On Monday, the 10-year yield surged by 17 basis points, one of the biggest single-day jumps in the past 2 decades. Investors, alarmed by the U.S. decision to impose 104% tariffs on Chinese goods and the risk of a global economic slowdown, began selling off bonds en masse to free up liquidity and meet margin calls on losing positions across asset classes. Regulators are closely monitoring the situation due to its potential impact on financial market stability. Currency markets also reacted to the escalation of trade tensions between the U.S. and China. The U.S. dollar weakened against traditional safe haven currencies, the Japanese yen and the Swiss franc. The yen strengthened by 0.7% to 145.20 per dollar, nearing a 6-month high. The Swiss franc also rose, pushing the dollar to a 6-month low in that pair. Meanwhile, the Chinese yuan fell to a record low, sparking concerns over potential interventions by the People's Bank of China. The euro also gained against the dollar, continuing its upward trend. These moves reflect growing investor anxiety over global economic prospects and the possibility of a U.S. recession. Oil prices dropped sharply, nearly 4%, after the U.S. announced 104% tariffs on Chinese steel and aluminum products. The news fueled fears of a slowdown in global economic activity and weakened demand for raw materials. The decline came despite ongoing geopolitical tensions. Adding further pressure were reports of rising oil inventories in the U.S. market. Participants are now assessing how these trade measures may disrupt supply chains and industrial output in key economies. The latest round of U.S. trade actions has extended into the crypto sector. Tariffs targeting Chinese crypto mining equipment have already driven up its cost. Meanwhile, miners operating outside the U.S., particularly in regions with lower electricity costs, are benefiting from more favorable pricing. This shift could reshape the geography of mining, reallocating capacity toward non-U.S. markets. At the same time, leading Chinese chip manufacturers are facing increasing restrictions, complicating their ability to compete globally. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.